We are live with today's webinar on the highly relevant and anticipated topic, NewGen Human Capital Management, Decoded through Workforce Analytics. My name is Naomi Secor, and I'm a Program Director with HR IQ. I'd like to welcome our host, WNS, and our esteemed speaker faculty, and welcome you, our attendees, to join us for the next hour as we discuss the need for analytics in HR. As we tread through 2014, we realize that recession has become an event of the past, and global organizations today are setting the ground to achieve aggressive growth. In this phase, human capital is arguably the most sustainable source of competitive differentiation and value creation. As HR functions don the hat of a strategic enabler, helping organizations tap and retain the best of talents, there is an imminent need for an insight-driven decision-making approach as compared to an intuitive-driven decision-making. Application of analytics in the HR realm is of paramount importance. To discuss this topic, I'm pleased to introduce our speakers. Joining us today, we have R. Swami, who is the Chief People Officer of WNS Group. Swami leads WNS's human resources function and is responsible for the entire gamut of people-oriented processes. Swami is an HR professional with experience spanning operations and sales. We also have Rajesh Ranjan, who is a partner with Everest Group. He leads the group's business process services, syndicated and custom research-led advisory practice for the global market. And we have Andy Field, head of HR operations with the London Stock Exchange Group. Andy is responsible for implementing the new group HR operating model and creating a global service lead HR operations team. So welcome all, and Rajesh, I'm now going to turn this over to you to get us started.
Thanks, Naomi. Again, good morning, afternoon, evening, everyone. As Naomi was mentioning, the key question as we start today is, why are we talking about analytics in HR? Why is this important? We see that both pull or demand side factors as well as push or supply side factors that are driving the need for HR analytics and really making it a strategic imperative. Let me spend a couple of minutes walking through what are those key pull side and push side factors that are creating and driving the need for HR analytics. The first one is really around movement beyond what we call intuition-based decision-making. HR has traditionally been focused on the softer aspects and kind of stayed at arm's length from hard numbers. The other way to put that is, it has largely been considered an art, and consequently, HR decision-making has often been intuition-based. However, we clearly see that there is a growing realization to add the science to this art and make it more effective. And that is the place where analytics come in. The other factor that we see is really around driving better talent engagement and management. Clearly, the ability to acquire, manage, engage, and develop talent is now on the top of CEO's mind. And really the art and science of analytics is emerging as a handy weapon in this talent war. And this is much more pronounced in what we see as hard to find business critical roles and associated talent. Of course, there is increasing need to utilize resources better. And we also see that the current landscape of the traditional HR tools that have been within the organization is often fragmented and does not provide the actionable insights which HR leaders and business leaders are looking for. When we look at the push side factors, clearly there has been a significant advancement in science behind analytics. If you look at some of the industries such as retail, CPG, analytics has been used for taking some specific decisions. That is now percolating into the HR realm. Of course, there has been advancements in tools and technologies, making it much more cost-effective, much more affordable and feasible. Availability of digital information. We live in a digital age. And hence, the availability of digital format of data has also spurred the application of analytics. However, we also see that the large quantity of data being generated from diverse sources needs to be addressed in a systematic way in order to glean meaningful insights from it. Of course, there are some emerging examples of successful HR analytics which my colleagues are going to talk about, which is also providing that confidence into organizations to take that journey. If you can move to the next page, please. So our research at Everest Group shows that there are, and these various levels of analytics solutions vary in terms of the sophistication as well as the business impact that it can potentially create. The first two, reporting and descriptive analytics, essentially provides a detailed view of what we call as-is situation, while predictive and prescriptive analytics helps you understand the to-be scenario. As you can see, most prevalent analytics solution today is around reporting and descriptive analytics. That constitutes almost 70% of analytics. However, the most interesting aspect is around predictive and prescriptive, which is 30%, but growing, and we expect the market and the usage increasingly towards predictive and prescriptive as we move along. Next page. So how do we really make it work? We believe that one ought to create data to insight to action loop and really operationalize that within an organization to create sustainable value through application of analytics. Let me spend a couple of minutes going through these steps. The first one is really about clearly defining objectives, having certain hypothesis problem statements in place. Of course, one also ought to be very clear and set associated boundary conditions. The second aspect is really the data. We all know the concept of garbage in, garbage out. And hence it becomes very, very important to have the right kind of data being extracted, collected, filtered, and categorized. So data integrity becomes very, very important. The third step is really what I call the brain of analytics. This is the place where data contextualization happens. This is the place where one needs to create those algorithms, those models, which will start providing you the insights and the prediction and possibly prescription that one ought to put into action, which leads me to the next step of action making. As you take those actions, as you make those decisions, you also need to collect and measure the results of those actions, which needs to again go to the feedback and again need to be defined in terms of the objectives. So one needs to kind of create this data insight action loop and really operationalize it within an organization, within HR construct to really make the most out of it. with that, let me pass the ball to Swami. Swami, over to you.
Good morning, good afternoon, good evening, everyone. Rajesh gave a perspective of an industry orientation, the push and the pull factor. So the scope of my presentation, what I thought I'd take a dab, is about the practicability of analytics in a work environment, and also from a provider and the practitioner perspective. Can you go to the next slide, please? Typically, I want to have this presentation laid out in 4 parts. One is, I really thought, what is the art of possible in the analytics framework? Really wanted to, talk about a foundation for analytics, which is an integrated data management approach. Really want to talk about certain actionable business intelligence, and Rajesh did allude to you about, the top of the pyramid, like predictive analytics, and how to go about doing that. Can you go to the next slide, please? So what you see here is basically what I define as typically, many companies who want to do analytics, a typical analytics trap, right? Everybody wants to do analytics, right? But typically from my experience, we understand and we see in most organizations, when you see organizations, typically between 1,000 workforce to a 10,000 workforce, and that has been in the industry for over 10 years. We somewhere see about most employee data spread between 8 to 10 systems, and this number dramatically increases once you marry organizations that are over 10,000 people, and actually we end up seeing between 70 to 20 systems, could be ERP, could be homegrown systems, that actually host employee data which don't talk to each other, right? And typically for a great organization, when we do a diagnostic, we say that there are 2 parts to it. One is called data adequacy and the other part is called data accuracy. If you have a 50% data that explains your employee, we call that as a great organization, right? And if you have any where between 30 to 40% of the data accurate, we consider that as a great organization that can start really practicing analysis. And really I want to draw your attention to the left-hand side of the slide, where we say that when you use data to generate reports, and like Rajesh said, there are 2 types of reporting we spoke at. One is called push reporting and the other is called pull reporting. Initially we advise and we also believe that the organizations should start with push reporting because we need to get oriented to reports and how to use them before moving online on a web-based thing, because I do see a lot of our companies and our customers, and including ourselves, have a lot of built-in reporting engines, but when you look at usability and usage of those systems, they are hardly anywhere between 10 to 17%. When you use these reports to draw certain level of intelligence and try and take certain level of decisions, that's where probably you call it analytics, right? And when you use analytics to drive transformation, that's where you really get into business intelligence and drive transformation. So I want to pick, some part from it that could be interesting from this audience perspective, right? When you take performance prediction under the workforce management acumen and business intelligence, everybody wants to do performance prediction, but we really believe that you need to have a strong, adequate database to really understand who are your good performers, and then leverage on tools to actually help people predict that, okay, given this person is X, he's been demonstrating X, Y, Z behavior characteristics, his objective data, are going to be A, B, C, and he or she might perform at a Y level, right? But, and that becomes the core of availability of data and the use of analytics ways and predict performance, and this could be very useful from an organization perspective. And when I take an example of decision construct, so I think most companies really want to speak about social media strategy, right? And really you can leverage analytics to understand social media strategy. You can really use the data that to have the social media strategy. You can really look at multiple data, whatever is available in the ecosystem to understand the social media strategy. So when I go deeper into that, some of the examples can be, what we call as crawlers. So we typically take organizations, put keywords into it, and search for it, and really understand employee sentiments, right? And employee sentiments in a portal is a great way, in a Facebook or a Twitter, is to understand employee association, for the ecosystem. And thereby, you can use your primary and secondary research to really go and seek for, data clarity and understand what we want. When I take an example of sourcing dashboards, it's very important to understand reporting. So we use multiple data to bring these dashboards in terms of where is your supply coming from. A relevant use of a sourcing dashboard and an integrated social media strategy and a predictive hiring model in combination is what we believe can deliver business transformation. So technically what I wanted to emphasize on this slide is there are various things we can adapt from the HR analytics team. We can have a huge impact at an insight level. We can have huge impacts at decision construct level, and we can have huge impact at the business intelligence level. Can you go to the next slide, please? So the biggest question I get asked is, how do you create databases? So technically what we have done is, for an organization to get ready for analytics, there are two types of data, right? One is structured data in your ERP, and there are a lot of unstructured data which hold a lot of information. Could be in Word, could be in Excel, could be in emails, could be in PDF. Now what we've done over a period of time is to build very intelligent algorithms, that could enable us to really understand what is the data that is required, in a complete sense. So typically, for example, right, you might want to understand the ratio of men to women in an organization, but you might not have the complete data for everybody. So what typically we would do in our algorithm is impute the same average ratio of men to women. I'm just keeping the example very simple so that you're able to assimilate it, right? And what we do is we do a lot of data cleansing, we do data profiling, and what we do is data imputation, where we try and create these data sets in a very smart manner. Because typically for a 10,000 people organization, to build at least 30 variables for an employee would take anywhere between 12 to 24 man-months of effort to get that data up. So technically we bring in tools and technology that people can leverage and really get an integrated data management approach, which is a foundation layer for analytics to really do the further analytics into the whole ecosystem. Can you go to the next slide, please? So here I come to the most interesting part. I get a lot of questions that how do I use analytics to predict, right? Some of the highlights where I really want to lay out on the table is there could be a lot of analytics we can bring in terms of what kind of person would work for you or not work for you, but really going through the current data of people who've been successful or not successful. So this can impact candidate performance, this can impact candidate tenure, this can impact sourcing strategy, this can impact all. So typically this model, I think Rajesh alluded about the retail. I think the most advanced analytic work group has always been the consumer lending environment, and this is primarily an adaptation. To give an equivalent example, let's say when you apply for a credit card or any kind of a bank loan or a mortgage, the bank runs a risk on you, right? And typically the same practice is translated from an employee lookalike scenario that we try and say, okay, given are these XYZ type of indicators that are non-discriminatory, that are also actionable, we try and bring that into the scope and try and see whether can we improve our hiring screens and hiring mix. And the same kind of models can be also used to ascertain, predicting the performance part. I alluded to the bit of it on the earlier slide, but these two, are really going to drive the future where HR can get really, really intelligent about the kind of people we recruit, because a recent survey suggests that as a function, we spend 20 to 25% of effort in talent acquisition and 70% on talent management. And also the research suggests that if you are able to even increase the time and the intellect we spend in talent acquisition by another 10%, the effort, the organization performance almost goes up by another 20%. So it's a part where really we can impact the business and really make the business perform. On to the next slide, please. How do we do predictive attrition, right? I think, typically when you have a set of people, a top talent ecosystem, currently the economy is looking up, and we do the right kind of things. It's very, very important for us to know that who are your top performers and what are the attrition predictors, right? And years together, we've been relying on more social quotient kind of information, whether an employee is happy, employee is unhappy, is the employee demonstrating certain behaviors that would drive, that would give us an indication that he's leaving the company. But technically what we understand is that if there are no interventions at a timed basis that could be based on your organization culture, you should be able to predict attrition, right? And basis multiple understanding and various employees. So the way companies do it and we do it are very, very interesting. What we essentially end up doing is we combine a data set of people who are active in the organization and combine a data set of people who are not active in the organization and try and see are there significant differences in the way they behave. And typically what happens is 6 to 7 actionables where you'll be able to understand that if you're able to action on them, typically could be a manager change, a career progression, a reward instance, or a learning intervention. Your ability to increase the longevity of a high-performing employee is very high. And the contribution you make to business in this level is, is very unparalleled. So, in sum total, what I'm trying to articulate, if I have to summarize before I pass on to Andy, is the fundamental building block of any HR analytics practice is to have an integrated data management approach, right? Once you have an integrated data management approach, the next step is really for you to understand how you want to go through the value chain. And I think probably a best way to start is from a reporting side, get insights, decision constructs, and business intelligence, and then into transformation. And there are projects we can pick to from any other side. But I think with the trend and the kind of products that are coming into this play, I think HR analytics is going to drive the future of how we HR professionals engage with business, and it's going to bring a huge amount of quantitativeness into our approach and the way we handle things. So over to Andy.
Thanks very much. Good day, everyone. So I'm Andy Field, and I've been asked to speak on this as kind of more of a, if you like, a user of metrics within HR. I really wanted to concentrate on just looking at maybe the other guys have talked about how this is pulled together and what it can do, and I want to concentrate mainly a little bit on how we use it in a practical sense within the business. So if we can move on to the next slide, please. Okay, so when thinking about this webinar, I was kind of trying to look at how we practically use the metrics in the business, and I think the first thing I'd kind of like to point out is that if HR is going to be taken seriously as a decision maker within any organization, we have to ensure that we are armed with the same type of metrics that maybe we would be expecting out of a commercial manager or a finance manager. And I think traditionally in the past, that's not necessarily been the case. It's been much more reactive and about feelings and thoughts rather than actually hard business metrics. And I think that, as the guys have demonstrated before, is that the speakers previous to me have demonstrated is that it is now possible to start putting this together. And what I wanted to do is really look at how we use these metrics in a real sense within the stock exchange, and how we make them work for us. Ultimately, this is about giving HR a seat at the decision-making table, and actually making a real difference to what we do. And not just necessarily just purely people-related. So what I've done is I've split up, how we use metrics into sort of 3 key areas. And it's important to understand that whilst we call ourselves the London Stock Exchange, actually we're a business of over 3,000 people in more than 20 countries. So, when we talk about HR metrics, we're talking about HR metrics that stretch many businesses and many types of businesses, but also many cultures and organizations. So understanding that is really very important to the nature of how you develop and display and you use the metrics. So the slide you see in front of you really is how I've kind of chunked up how we use metrics within the exchange. So the first one is the measure, what I call the measure of HR service, or how HR is performing. Many HR people are now moving to much more service level cultures, where we have hard SLAs with the business. So for example, in the finance sector, where we're highly regulated, the services, the regulators themselves are specifying what those businesses require in terms of service from all corporate functions, not just HR. And it's up to HR to actually be able to present this out in the form of SLAs and agreements and service agreements, so that we can be very, very clear about how HR is performing. These sorts of measures are quite important, and I will come to the next slide in a minute. The second area is around business performance. So this is around, if you like, the traditional metrics that people probably are quite used to in the business, and this is about sort of how we use metrics to actually measure the performance and what's happening to our people. And the third one is what we call strategic metrics. And so these are metrics that we're using, and it's a combination of all of above and more, where we're starting to combine these with things like financial and other commercial metrics, so that we actually come to the table as a strategic decision maker. So if we concentrate on the first one for a moment, so if you can turn to the next slide, please. Thanks. So HR, measure of HR service. As I said to you, as I was saying, this is critical now in actually proving that HR is giving a fundamentally sound service to the business. And it's to understand that we're actually contributing value for money, and actually giving the best service that we can. And it's also looking at the understanding of how we look at quality versus cost. And being able to present to a service not necessarily just the highest quality service, but actually what is the best cost service. Sometimes the sorts of services people need are not necessarily gold-plated. It's actually what's appropriate to the business at the time. We also and the key points in the slide here are around being able to prove that the services that we are doing what we say we're doing, that we're doing it in the way we should be doing it, and we're doing it as value for money. underneath is the second part of the slide sort of gives you an idea of the sorts of measures that we're using to actually fulfill these promises to the business. So, for example, within recruitment and selection, it's things like time to fill and cost of hire and quality of candidate. Interestingly, some of these are very easy to measure and pull off. They straight from systems, things like time to fill and cost for hire. It's a very finite and simple measure. When we come to things like quality of candidate, we then have to start looking at wider measures and actually being able to pull these through to actually give a bigger picture. So, for an example, a quality of candidate could be measuring people's appraisal ratings in the first year, combining that with things like how many people leave within the first 3 months. People that are put on performance-related plans because they're not meeting expectations, and also feedback from actually things like managers. All of these have to be corralled together, and we can start creating a quality of candidate measure. However, some of these can take some time. In terms of employee relations, it's very much around things like the management of issues and outcomes, the length of the process, how long we take to manage a case through, and also how much it costs the business in the long run. And we can go through talent reward and general things like service level and reporting system availability. And all of these together, and there are many more, these are the sorts of measures we use to do this, and ultimately they form an SLA with the business. And that kind of gives us a view of how we measure, in the end, the effectiveness of HR. So we move to the next slide, please. Thank you. So the second one is around business performance, and this is what I'd term as the sort of more traditional ones that people are used to, measuring such things as headcount, absence figures, sickness figures, turnover, attrition rates, etc. Sort of things that show how the business is performing in terms of its people. Interestingly, one of the key differences now is that these traditional measures have now been translated into what we call KRIs, or key risk indicators. Within the financial sector, this is a large and a very important change to the way we look at these sort of more traditional business performance metrics. Ultimately, within the financial sector, as in with many others, we are now looking at a situation where regulators and other people looking over our shoulders want to understand how we're managing the risk of the business. And to manage the risk of the business, we have to understand that there might be a risk in the first place. And the regulators are very much looking towards metrics such as HR metrics are very much looking towards us in terms of how we actually measure those risks, and more importantly, how we spot that a potential risk may be occurring. An example of that is in the KRIs. It's things like how many key roles do we have, and how many succession planned people do we have in those key roles. The risk to the business being that if we have a number of key roles and we have no succession plan for them, then that becomes a risk to the business. And this allows us as HR to start actually telling the business where there are actual potential risks. And therefore, we start becoming a key player in the wider business performance as the regulators start demanding these to be more and more aggressive and more measured, which we haven't seen in the past. So this is very much how HR is, if you like, becoming intrinsically more required in the business to run things like regulation, whereas in the past they were nice to haves and areas where managers might be, have an interest of, something in terms of, a particularly high area of sickness or a high area of turnover. This becomes actually far more intrinsic in the way we manage ourselves. It's been really important that this data is centralized, and again, the guys earlier were talking about how how this works and how you can do this. Ultimately, the centralization of data has been vital, because we have to give the regulators, as well as all other areas, a view of our business, not just in one country. Regulators aren't interested about only, for example, UK data, if actually most of the services, in our case, are being supplied from Sri Lanka, as they are with the exchange technology. So we actually have to look at this in a much more global position, which is always interesting, because then pulling together multiple systems, multiple countries and multiple organizations becomes actually quite a challenge for HR. So in terms of the business performance, these traditional measures have moved on apace. The final area, which if you could turn to the next slide, please, is strategic. And this is something that we've been developing over the last 2 years in the exchange. And really, it's about actually HR getting its seat at the decision-making table in organizations, which maybe in a lot of traditional organizations haven't been done in the past. So particular areas that we've been working hard on in terms of using metrics is within our mergers and acquisitions, group remuneration policies, which have a knock-on effect with the wider strategy of the business and even shareholders. Business integration, so this is using metrics to understand what our business looks like, but also modeling what new businesses that we've bought look like and how we best integrate them into a single entity. Long-term business planning is very much about starting to look at trends both inside and outside the organization. So using the metrics that we've been collecting over the past 3 or 4 years to start looking at long-term planning and putting this against both financial data and also external HR benchmarking data to actually start predicting where things may be in the long term. This is really important in terms of actually HR being part of the wider business planning process, being able to start predicting where budgets may go, where therefore costs may rise, and also to start looking at wider issues around where things may land in different countries. It's becoming more and more important for HR, for example, to understand where may be the best place to grow a particular business, being as the fact that we now have a global setting. The final area is in the sort of the wider strategic objective setting. This is somewhere where HR has taken a lead in the exchange. And this is actually about not only understanding how the business actually how the business sets their objectives, but actually looking at how we've past performed in conjunction both with people and commercial and financial, and actually being able to take a lead in objective setting within the business. And again, working with the senior management teams in actually suggesting where the business should be going in the future, and then being able to set those objectives. The sorts of material that we use in this strategic management is not just in our own internal data. So we're very the sort of metrics that we're using are a huge combination of both our own internal data that we've been using, but also industry standards and trends, be them benchmarking, be them economic and other. Combined financial and people data. So we've spent a lot of time in the exchange starting to actually combine the finance and HR data so that we can actually come up with both models and trends and predictions, allowing us to model out, the impact of people on finances and versus the finances on people. And so really getting us to the table in terms of the decision making. And finally, actually having the ability to data model, and almost this is the most important piece of the whole trend, is that what the business are looking for us is to actually be able to say, if we buy this company, this is what our cost base will be in the future. And if we decide to increase or decrease by X percentage, this is what it's going to look like. And it's the ability to have the tools and the infrastructure to be able to feed that data in and to be able to then predict with some accuracy what something might look like in the future. And more as we do this, the business that coming to see HR is much more akin to sort of a finance operation than say maybe HR was viewed in the past, particularly in traditional industries. So in summary, there are 3 key elements that we have. One is obviously good data that we both inside and outside of HR that we can pull on. The second one is infrastructure, and the guys have talked about that in some detail in terms of being able to pull together these metrics into something cohesive that actually means something. And the final one, which probably isn't covered here, is actually, and most important, is actually having the people that can in HR that have the ability to do this data analysis that can make connections and actually come up with both models, predictions, and trends that mean something. And almost that is the hardest piece of all, because actually finding people that are, let's say, HR literate, that also have highly developed abilities in terms of analytics is actually quite difficult, and actually probably one of the main areas where we are still developing our abilities, because these people are quite rare. The likes of WNS and everything can help fill a lot of those holes, we found, and a lot of people are turning to that sort of model. Sorry, I hope that's been of some interest in terms of how maybe we're at the exchange using metrics, and I think that it's quite important that we actually understand that there are very different ways of using it, and that each in its own is very useful, but together it becomes incredibly powerful. And I think that concludes what I was going to say, guys.
Okay, great. So now we're going to take some Q&A. So our first question is, what is your take on development-oriented metrics like time in position for high potentials or participation rates in new manager programs? Also, any comment on ROI on training investments, for example, according to the Kirkpatrick-Phillips model? Who would like to take that one?
So I can, I'll take a stab at it in terms of time to be in a role. Typically what we advise is every organization has a learning curve and a performance curve, right? And, the industry says, for different industries, for mature industry, they say, high potential is 24 to 36 months. And for, high growth industries, it's anywhere between 18 to 24 months for high potentials to be in a new manager program or in a new role. Typically, a well-done program, return on investment, in my point of view, it's typically at least a 3 to 4% impact on the top line and bottom line of the organization. From a Kirkpatrick kind of a model, I don't think the systems have developed in such a manner to understand returns on investment. So a very simple way, what we normally do is to say, calculate the cost of investment from a training perspective and have a behavior indicator scorecard that allows you to monitor that over a period of time. So, I mean, if any of my co-panelists would like to add on this, more than welcome.
This is Rajesh here. Just one thing that I would add from a learning perspective, among different HR areas, potentially learning can have significant impact in terms of employee productivity, leading into actual business result. Having said that, various organizations have kind of struggled to really define and kind of make that connection. There are some advancements being made there. I think it goes back to, in a way, the thing that I was talking about, creating that feedback loop and kind of having certain learning interventions, then kind of measuring the output with having a kind of a specific hypothesis, specific objective in mind, and then trying to kind of iterate and improve. That is going to be important. So, yeah, I'm not directly answering the question, but just wanted to kind of throw some light to that.
Thank you. As we're still talking about measurement, we had another question from the audience as to how is employee productivity measured, if somebody could comment on that.
I'll have an initial comment on that, and I think that it's a very good question and incredibly difficult to answer. I think that in some organizations and some industries, productivity is relatively straightforward to measure in terms of unit output or developing X amount of products in Y amount of time. I think when you start getting into larger organizations where the product is slightly less defined, it becomes much more difficult. Again, certain areas are easier than others. So, for example, sales is relatively straightforward because all you have to do is start looking at how you develop your commission plans and how you use the measures that are generated off something like that to show how productive people are. But when it comes to the more generic groups of people, I think that productivity is one of the most, for me, difficult things to measure. And I think that I would personally, unless it is a very obvious, unless it was a very obvious type of industry where you can very much look at the individual and what they produce on a time-by-time basis and the quality that they produce to. I would be far more pushing people to look at the analytics of how does a department or an area, how productive is a department or area, rather than the individual, because it's a very subjective piece. People lend different things to a team. Which will mean that sometimes some are more productive, but others have other jobs within the team, which make them less productive, but they are actually doing things in other ways that make the team as a whole more productive. And therefore, you can becoming too granular in the measurement of an individual's productivity, I think can actually be dangerous. I would always err towards the side of looking at the productivity of a team or a group.
Right, and if I can add to Andy, I think that he made a great point, which is, you might want to measure the productivity of the team, but we've also advised and seen certain large mature organizations, have a very strong process to measure and manage efforts, right, which in indication would tell you that you engage the workforce for a period of time, and by research and your business understanding, you're pretty clear about what kind of outcome it should do. So I mean, the adjunct way, as Andy said, is very clear organizations where there is an output that could be tacked to an individual, and where you could deploy a time and material study kind of a stuff, time and motion study, then productivity is directly measurable. But in places where people work on strategy roles, people work on different ecosystems, we have to have different times, and we need to have more adjunct mechanisms like managing efforts, or key performance indicators or key behavior indicators, for you to understand whether they are on track.
Great, thank you. So we have a couple more questions coming in. They're all good, so I'd like to get through as many as possible. So moving on to the next, can you explain more about prescriptive analytics and maybe give an example of how it's used in other organizations?
Sure. So let me take that up. So when we talk about predictive analytics, we talk about what is going to be the future scenario, but prescriptive analytics actually go a step ahead and also suggest what is the likely solution or step that you should take to address that likely issue. So let me give an example. Predictive analytics may tell you what are the chances of, let's say, a particular hire that, or rather a particular employee leaving that organization based on various factors that you would have considered in your predictive module, and it will give you that probability. So that is predictive analytics. Prescriptive analytics will also suggest the elements that you can possibly put in play to mitigate that risk. So net of that, predictive analytics is going to tell you how the future scenario is going to look like, what is the likelihood of that scenario to happen. But prescriptive analytics actually goes a step ahead, also starts suggesting some solutions to manage that future scenario.
Okay. Do we have any further comments on that one?
I was thinking through that. I think when you overlay a lot of domain and consulting over the data to prescribe a solution, I'm trying to simplify the whole thing, right? can be, the enabling of a predictive analytics to a logical solution can be also termed broadly as prescriptive analytics. And sometimes when you have mostly predictive analytics have been done using variables that are within the controlled environment. Prescriptive might go into macroeconomic variables and other things that can also come into play. And just like Rajesh alluded, it just gives you a more actionable insight, which takes you a bit ahead of predictive analytics, and that's where you touch the path of transformation.
Absolutely agree, Swami.
Okay, great. So I have a question for you, Swami. There's often a lot of inherent challenges while trying to execute a performance-driven rewards program. How can we leverage analytics to tackle these challenges?
I think first of all, when you have a performance-driven reward program, it basically emphasizes that you've got all the data to measure that performance, very clearly and very transparently. Where analytics can come in is from, I'm going to take you through the order of what I spoke earlier in terms of reports and data aggregation. That means, do you have all the performance metrics that are laid out in a transparent fashion to explain to people that this is what they're getting measured on, right? And then when you go a bit about the use analytics, and you need to help people to understand how they can achieve their reward, because typically in a non-action-oriented HR ecosystem, what happens is a reward plan is given and forgotten and gets reviewed at the time of execution. Typically, where analytics can come into play is to, take a Salesforce environment. Typically, tell a sales guy how to change his product mix to get him, his incentive or commission earned. There could be a huge leverage of analytics on it. Okay, and when you go to the next level, there are two aspects to it, right? Always an employee aspect to any work and an organization aspect to any kind of work, right? And if you're able to translate this data and tell the organization whether this reward construct is driving the right kind of behavior or it is driving the wrong kind of behavior, do we need to tweak the plan? There is a whole host of analytics and data that could help you view that more intelligently than what you were viewing before. And exactly the same for employees in terms of where has he gone wrong or where he or she needs to have done better could help them in their developmental journey much better. The integration of these two, this until here, are bordering on predictive analysis. The integration of these two to enable a better plan that is more transparent, that is more system-driven, where people understand how to earn the performance reward, can be really transformation. That's where you touch the transformation. I just took an example to go through the entire value chain or value construct, and that's how you leverage analytics from foundation layer of reports to a transformation level when it comes to performance rewards.
Thank you so much. We had another question come through just now. In the list of data sources from the presentation, the software as a system systems are noticeably missing. Can you comment on that?
Why don't I start and then go on? It's interesting. So the exchange primarily uses software as a service systems for all HR. We happen to use Workday. So I think that actually software as a service is really critical in a lot of ways to actually getting better metrics, simply because it's very, very easy for it to connect with multiple countries, can sit out necessarily outside networks, company networks, and most importantly, traditionally they tend to be very easy to connect to, or connect from. So it's a great data source, either as a repository in terms of your own dashboards and reporting, but it's also an excellent way of exporting data into third parties in order to connect up with other data to create even more powerful reports. So I did notice it was missing, but it's critical, and actually the software as a service approach is central to the analytic the direction of our analytics and the drivers behind our analytics. So it's a good question, and certainly I personally think one of the most important things we've done in terms of drive towards better analytics at the exchange.
Thank you so much, Andy. Okay, so we have time for one more question here before we go into a closing slide. With the industry buzz on HR analytics, has academia caught up as well? Do we see a trend of industry-ready HR analytics SMEs graduating in the near future?
And I'll take this one. Well, let me take this one from my point, and then I'll leave the guys to finish off. I think there's two questions there. The first question is has academia caught up? And the answer is that I think there's a lot of great work going on in certain areas, particularly around HR transformation and how HR transformation plays a part in the wider business. I think that there is a lot of catch up between HR, finance, and commercial to become more, if I want to say it, joined up and presenting, in other words, folding people data in general into wider company analytics. I think is not quite there yet and needs to be better. Also, I think that what's really interesting is that I still don't think, certainly in the UK, that, say, HR graduates, particularly ones through the trade bodies, aren't necessarily as up to speed on how HR analytics can really be used and developed in the wider business than maybe they should be. And so I think that there is some good stuff going on, but there are some gaps. And that's from a user perspective, but I'll let the other guys answer from sort of a wider perspective.
Sure. So the interesting thing that I see here is within HR, we are trying to solve for talent-specific issue. But I think as you talk about analytics and analytics in HR, I see a significant issue around that kind of talent availability. Talent that kind of understand the data scientists or data doctors, as we call it. There's a significant gap in the industry based on what we have researched. That is pervasive, and HR is no exception. So, if I were to say one of the issues that at an industry level one will need to solve for is more data scientists, I would say more HR data scientists, because as you all know, analytics is about a combination of data tools and competency that comes from both statistical competency as well as domain competency. So I think there's a need for industry and academia to collaborate and bridge that gap. If that doesn't happen, possibly some of the value, some of the strategic element that we talked about today in terms of capturing those, we will fall short of that.
So again, just adding on to the guys in a very short span, right? I mean, I have a very positive outlook, right? I mean, if you rewind 7 or 8 years back, most HR guys didn't know IT, right? And we learned that part and became functional domain specialists, right? I think what is very gratifying is the HR guys have got specialized over the last 5-6 years, and I think they have deep domain expertise right now. Now translating that into an analytics overlay is an effort. I agree with other people, but not very impossible. And and I think that is going to give us the talent pool for the future, because this trend has just caught on for people to broad base it, in my view.
Thank you for your comments. If we can move to the final slide, I'd like to invite you, Swami, to comment on this before we close up today.
Right. So, for all the participants, we sincerely thank for being a part of this forum. Very encouraging, and I thank my fellow, panelists for adding a lot of value. I really wanted to leave the audience that we are launching our global HR workshop series. First, we really wanted to do a workshop on methods to measure the total cost of human capital, and just some question we we kept, getting asked. We are having this on 29th October at Dubai, in Dubai Golf Club. So, for more information, you can reach to marketing.wns. So there is a series of workshops which we'll be launching. More than happy to have people who are participating, and we'll ensure that, you guys go back with a toolkit that allows you to measure these things, and really practice analytics, because we really want a knowledge per se from an analytics perspective. And thanks for the opportunity to be with you and really enjoyed the session.
Well, thank you. This concludes our webinar discussion. I want to thank everyone for joining today's discussion on workforce analytics hosted by WNS, and thank you to our speakers, Rajesh, Andy, and Swami, for sharing your perspectives. The slides from this webinar will be made available to you, as well as the speaker contact information. So until the next time, and have a great day.